A warm welcome to everyone joining today's session. It is a pleasure to be with you and kick off the second day of the Impact Symposium. I am Jennifer Pryce, President and CEO of Calvert Impact Capital. Over the next 10 minutes, I have been asked to share with you our experience in implementing our impact measurement and management framework, how other impact investors can consider implementing an IMM framework, and the importance of these types of frameworks. Before getting into sharing more as to the implementation of IMM, I would like to share with you why we at Calvert Impact Capital took on this work, why it was for Calvert Impact Capital that the investment in IMM was vital to our organization's future growth. Knowing the why is critical to anchoring IMM in a framework that will be realistic and effective for your organization. If you don't understand the why you are measuring impact, you won't understand how to measure impact effectively. Also, to give you context for my remarks, a bit more about the work we do at Calvert Impact Capital. Calvert Impact Capital is a nonprofit investment management firm. We are based in the United States. We raise capital primarily from U.S. investors. Our products and services, therefore, are overseen by U.S. regulatory frameworks. The capital we raise, we invest globally. Since our founding, about 25 years ago, we have raised $3 billion through our products and services such as syndications and capital aggregation, channeling all this capital to investments that contribute to positive solutions for people and planet. These investments can range from affordable housing to investments in local financial intermediaries to investments in solar energy. What is consistent is that we seek a financial and a measurable and intentional impact return without compromising either. As a practitioner, I see day in and day out the importance and complexities of striving for greater impact. Over the past 3 decades of our existence, we have engaged with over 20,000 investors with investments that range from $5 to $50 million, and investors of all types, individual, financial advisors, institutions. Investors come in all shapes and sizes, but what is consistent is their ask for knowing the impact of their investment and delivered in a way that is easily understood. It is this need to communicate transparently and authentically the impact of an investor's investment, and to be able to do so easily, which was the driving reason for us to map the impact of our portfolio. Over time, we have seen benefits that have been expanded, like better decision making and just simply understanding the overall impact of our portfolio. It has been both the work that we have been doing internally at Calvert Impact Capital to develop a culture and infrastructure to support a robust IMM framework, as well as the work within the industry supporting the coalescence of impact asset owners and managers around the operating principles for impact management that have both been fundamental to ensuring we are able to communicate our impact, but also that there is an established industry standard that enables investors to engage in moving from alignment to SDGs to action for the SDGs, to enable all investors to be impact investors. The building of an ecosystem that supports IMM is the work of the entire field. It is the opportunity for all of us to contribute, and why I was motivated to be with you today and to share what we have learned at Calvert Impact Capital. It is the hope that my learnings, my sharing, being with you, can accelerate others to engage in the opportunity to adopt an IMM framework or simply to deepen your existing practice. I mentioned that the operating principles for impact management is a fundamental part of our IMM. So, what are the impact principles? The impact principles created a market standard by which all signatories must measure, monitor, verify, and disclose their impact. It is a set of 9 best practices to ensure that impact considerations are integrated into the entire investment lifecycle, from deal sourcing to exit or repayment, and that lessons learned are continuously incorporated into portfolio management. The development of the impact principles was led by the IFC, who saw the rampant impact washing in the industry and had the insight that we needed a set of guidelines to follow as diligent impact investors. We shared the same concern, and we became a founding signatory in 2019. Our belief today, as when we became a signatory, is that when impact management disclosure becomes standard practice, firms that have and disclose their robust impact management practices will be preferred by investors, who will therefore have more validated and trusted tools at their disposal to evaluate impact investment options. As the impact principles become more widely adopted, investors will be able to discern between firms that manage impact in line with the impact principles and those that simply release flashy impact marketing without the substance behind it to back them up. For us at Calvert Impact Capital, impact has always been essential to our work. But over the last few years, we have been codifying our IMM practices into a consistent and robust process. Even before we signed on to the impact principles, we had been integrating IMM across our entire investment cycle and in our decision-making, particularly with the development of our impact scorecard. The impact scorecard is an internal impact rating tool that we use to systemically assess every transaction at origination and project the expected impact the loan or investment is anticipated to create. This scorecard contains 27 questions and is organized by the IMP's 5 dimensions of impact. It includes the assessment of our investor contribution to impact, the expected impact of a loan or investment, and the potential impact risks of the transaction and how to manage those identified risks. It is this impact scorecard that underpins much of our IMM work and enables us to integrate impact considerations into our due diligence analysis, just as we consider risk and return calculations. This process of incorporating our impact scorecard and our impact measurement and management process has certainly improved our decision-making based on impact. For example, an analysis of the result of the impact scorecard are included in each investment memo and presentation to our investment committees. And committee members discuss the results based on particular dimensions of impact, where the credit performs compared to a benchmark. For us, becoming a signatory and disclosing the alignment of our IMM practices to the impact principles was also a process of change management. And it helped that we have a culture of learning at Calvert Impact Capital. However, we found that still, this has not been an overnight implementation or even a process that takes a few weeks. It takes months and perhaps years to truly integrate and help everyone across the organization to internalize these processes. As a signatory, we open ourselves up to be verified by a third party to look at the integrity of our IMM processes. Although admittedly we were anxious of how this process would unfold, we have found the benefits to be many. One that comes to mind for me has been the opportunity to see our work in new ways. For example, we began to realize there is a wealth of insights we can glean from our organizations and our portfolio when they repay. And recently we started to codify those lessons learned in exit interviews and case studies, which informs our investment strategy and current relationships. We have also decided to open up these case studies to the field, and we now publish them on our website. Often, I am asked how other impact investors can implement an impact framework. To start, I would encourage learning from others' experiences and using the many resources at your disposal through the impact principles and other organizations. I have found there is a collaborative spirit among practitioners in this regard because, as I shared earlier, the efficiencies improve with increased standardization and cohesion among practitioners. Today's sessions that follow and the roundtable are all rich opportunities to begin to gather information and create a deeper IMM practice. As we are coming to understand, change, climate, and inequities is happening quickly, and investment can be a contributor to accelerating solutions to good outcomes. If I can leave you with one last remark, it is to get started. Go in with the understanding that improving your IMM will take time and understanding of change management, but it is so critical to implement best practices. As the saying goes, you manage what you measure, and we need to be managing and measuring our actions and efforts to actively contribute to the SDGs. Impact needs to be a consideration in every investment decision, and the impact principles is one of the most critical and well-supported and adopted frameworks to help your organization do so. Thank you for your time and engaging in this session, and enjoy the rest of your day.